Hey everyone, and welcome back to the channel. Today, we're diving deep into the world of trading. If you've ever thought about getting into trading but felt overwhelmed by all the options, this video is for you. We're going to break down the 5 major trading fields, so by the end, you'll have a much clearer picture of where you might want to start. Let's get right into it. First up, the one most people are familiar with, stock trading. This is where you buy and sell shares of publicly listed companies. Think of giants like Apple, Amazon, or Tesla. You're essentially buying a small piece of ownership in that company. The assets you'll trade here are stocks, also known as equities, as well as things like ETFs, which are baskets of stocks, and REITs, which focus on real estate. The stock market is generally seen as less wild than some other markets we'll talk about. But don't be fooled, it can definitely have its roller coaster moments, especially around earnings reports or big economic news. It's a great starting point for many because there is a ton of information available on these companies. Next, we have the biggest market in the world, Forex trading, which stands for foreign exchange. This is all about trading currencies. You're speculating on the value of one currency against another. For example, will the euro get stronger or weaker compared to the US dollar? That's the EUR-USD pair. The Forex market is massive, incredibly liquid, and it's open 24 hours a day, 5 days a week. This makes it really accessible. What moves these markets? Think big picture. Interest rate decisions from central banks, economic data like inflation reports, and major geopolitical events. If you love keeping up with global news, Forex might be a fascinating field for you. Now, let us talk about the new kid on the block that has taken the world by storm. Cryptocurrency trading. This involves buying and selling digital currencies like Bitcoin, Ethereum, and thousands of other altcoins. The crypto market is known for one thing above all else: volatility. This means prices can swing dramatically in a very short amount of time, offering the potential for huge returns, but also carrying a very high risk of significant losses. This market is driven by technological advancements, regulatory news, and overall market sentiment, which can sometimes feel like pure hype. It's a high-risk, high-reward playground, so it's crucial to approach it with caution and a solid understanding of the risks involved. Moving on, let's look at indices trading. Instead of picking one single stock, what if you could trade the performance of an entire section of the market? That's what indices allow you to do. An index is a collection of stocks that represents a particular market or sector. You've probably heard of the S&P 500, which tracks the 500 largest companies in the US, or the Nasdaq 100, which is heavy on tech stocks. By trading an index, you're getting a broader view of the market's health. It's generally less volatile than trading a single stock because the poor performance of one company can be balanced out by the strong performance of another. It's a great way to trade the overall market trend without having to analyze hundreds of individual companies. Finally, we have commodities trading. This is one of the oldest forms of trading, dealing with raw materials. Think of it in two categories: hard commodities, which are mined, like gold, silver, and crude oil, and soft commodities, which are grown, like wheat, coffee, and sugar. The prices of commodities are driven by the fundamental principles of supply and demand. Things like weather patterns, global economic growth, and geopolitical tensions can have a huge impact. For example, a drought could drive up the price of wheat, or a conflict in the Middle East could affect oil prices. Many investors also use commodities like gold as a hedge against inflation, making it a unique and important part of the trading landscape. So, to recap, we have 5 major fields. Stock trading, where you own a piece of a company. Forex, the global currency market driven by economic events. Crypto, the highly volatile world of digital currencies. Indices, which give you a broad market view. And commodities, the trading of raw materials like gold and oil. Each of these has its own unique characteristics, strategies, and risk levels. There's no single best market to trade. The right one for you depends entirely on your personality, risk tolerance, and how much time you can dedicate to learning. Do you prefer the relative stability and company research of stocks, or does the 24/5 action and global scale of Forex excite you? Maybe the cutting-edge tech and high volatility of crypto is more your style, or perhaps you prefer the big-picture view of indices or the real-world supply and demand dynamics of commodities. My best advice is to spend some time learning about each one before you even think about putting real money on the line. Most brokers offer demo accounts where you can practice with virtual money. Use them. It's the best way to get a feel for how these markets move without any of the risk. Explore, learn, and find what resonates with you. The journey of a trader is a marathon, not a sprint. And it all starts with this crucial first step of understanding the playground. Thank you so much for watching. I hope this breakdown was helpful in demystifying the world of trading. If you got some value from this video, please hit that like button. And if you want to learn more, make sure to subscribe to the channel and turn on notifications so you don't want to miss our future videos. What market are you most interested in? Let me know in the comments below. Stay curious, stay safe, and I'll see you in the next one.